Now, Russian President Vladimir Putin announced Wednesday that future payments for his country's gas exports must be made in rubles. Many see an effort to undermine Western sanctions and prop up Russia's struggling currency.
As explained by Putin, the new rule would apply to countries sanctioning Russia but still receiving its gas exports, a list that includes the EU and Japan.
A number of Western countries have taken illegitimate decisions on the so-called freezing of Russian assets. This collective West has actually drawn a line under the reliability of its currencies. We've already spoken about this. It crossed out the trust in these currencies.
But existing contracts are in dollars and euros, making the move dubious at best.
The announcement to pay in rubles is first and foremost a breach of contracts, and we will now talk with our European partners about how we respond to this.
It's also unclear how payments would even take place. Western banks don't trade heavily in rubles. Russian banks could exchange the currencies, but that would undermine sanctions, giving Russia much needed foreign currency, and in turn strengthening the weakened ruble.
I don't think it is practicable, and we already hear that not only Germany, but Italy and Austria have already declared that they will continue to deal with Gazprom according to the existing contracts, which means that the payment will be made in euro or dollar.
Which also means that Putin's demand further complicates the EU's long and painful divorce from Russian fossil fuels.
Earlier, I spoke to Jens Sudekum, a professor for international economics at the Düsseldorf Institute for Competition Economics. I asked him what Russia is hoping to achieve with its ruble payment demand.
I think he's testing the West. So yesterday morning, the Chancellor Olaf Scholz, he spoke in Parliament, essentially saying that we are not aiming for a gas embargo, essentially because we still need the gas. We cannot just turn it off. And now Putin is playing games and testing how far we can go, because he now says, well, you can have the gas, but only if you pay in rubles.
Will EU countries do it? Will they pay in rubles?
I think the likely scenario is that they will not do that. I mean, we're talking about long-term contracts, and they are in euro or dollar. So Putin cannot just come along and change the rules. I mean, if we would do that, that would be a very weak signal, actually. On the other hand, I mean, we still rely, especially Germany, a few other Eastern European countries, we still rely heavily on gas. So the other option would be that we kind of downplay what has happened and say, well, it doesn't really make a difference whether we pay Gazprom in euro and then Gazprom transfers the money to the Central Bank of Russia, and there is the exchange to rubles. In the new scenario, we would essentially just exchange at a different Russian bank euros for rubles and then pay Gazprom in rubles. It's not a big difference, factually speaking. It's just that Putin comes along and changes the rules. This is basically the difficult point.
Some have said that this is a way to sort of undercut EU sanctions and Western sanctions on Moscow. Do you think that's true?
Yeah, that's right. I mean, at the moment, basically, we pay Gazprom in euro or dollar. Then that ends up at the Central Bank of Russia, which is sanctioned. And so basically, they have to find workarounds and loopholes how they can make use of that hard currency to essentially affect the exchange rates on international markets. There are ways, there are workarounds. They can operate via China and so on and so forth, but it's difficult. So under the new set of rules, basically, we can make life easier for the Central Bank of Russia, because we would essentially allow the commercial banks of Russia to stabilize the exchange rates, because they would basically make that transaction of dollar, euro versus ruble for the central bank. So essentially, factually, basically, it would undercut the sanctions that we've imposed, because we wanted to affect the central bank. We didn't want the central bank to operate on international financial markets. If we follow Putin, we will effectively allow commercial banks to do the job of the central bank.
So what kind of impact will this have on EU gas supply, which, as we know, is already quite stretched?
Yeah, well, that depends on what governments will decide, whether they play according to Putin's book and downplay the impact, I mean, then factually speaking, I mean, basically business could go on as usual, and we just pay in rubles. As I said, I mean, it's a technical detail. We could do it. But I think the more likely scenario is that we see an escalation of the conflict. So basically, European countries saying, no, we stick to the contracts. They're specified in dollar or euro. That's what we're going to do. And then, well, we'll see how Putin will react. In the extreme scenario, he can say, yeah, well, I mean, in the extreme scenario, Putin will just close the drain for gas.
Shares in Russian equities, including Gazprom and Sberbank, can be traded from Thursday. But the end of the longest closure of the country's stock market in its history comes with some limits. There's still a ban on short selling, and foreigners are not allowed to exit local equities. But that may not be enough to stop a sell-off. European stocks with major exposure to Russia lost more than $100 billion in market value within days of Russia's invasion of Ukraine, according to an estimate by Bloomberg News early this month. Meanwhile, the ruble has also plunged. On February 24th, the day Russia invaded Ukraine, $1 was worth 84 rubles. On March 23rd, $1 was worth around 97 rubles. Today, Russian businesses are isolated due to Western sanctions. Most banks are blocked from SWIFT, the international payment system. And Russia's central bank cannot access around half of its foreign reserves. Several multinationals have also decided to quit the market as part of a boycott, making it even less attractive to do business in Russia.
Now let's bring in Timothy Ash. He's a senior sovereign strategist for emerging markets at Blue Bay Asset Management. Tim, thanks so much for joining us. So we did see the Russian benchmark index rise today. What do you make of that?
Well, it's pretty artificial. Firstly, short selling of stock is not allowed. There's a very limited section of stocks for sale, or you can trade. Foreigners are not allowed to trade them. And the Russian Sovereign Wealth Fund has basically put aside $10 billion to buy stock. So this has really been artificially maintained because Russia wants to portray an image that there's stability and it's regained stability on its financial markets.
Yeah, I guess you mentioned $10 billion that the Russian Sovereign Wealth Fund has used to help prop up the market. Russia is obviously pretty cash-strapped right now. What is the purpose of using that precious foreign exchange, that precious cash to prop up stocks?
Well, they want to send a general message to the population of stability and confidence. Remember, the invasion and the sanctions came as a massive shock to Russia's population. They believed the lies of the Kremlin that they weren't going to invade. So the biggest holders of Russian financial assets are Russians themselves. Foreigners sold out. So Russians were under massive amount of pain because of sanctions and the collapse of Russian financial markets. And there was concern about a run on banks and a broader collapse of macro financial stability. So it's all about sending a message that things are okay. Everyone needs to calm down. The Russian authorities have got everything in control. But it's, as I said, it's artificial. It's artificially maintained. The longer-term story is dreadful. Sanctions are going to remain in place for a very long time. The outlook for the Russian economy is terrible. There's no real reason to invest in Russian assets at this point in time.
There also is continuing discussions here in the EU, really around the world, about what further sanctions should be put into place. What do you see coming next in terms of sanctions?
Well, I think energy should be sanctioned, and Germany's central there because for years it's been appeasing Putin, and its over-dependency on Russian energy is its own fault, right? Sure, sanctioning Russian energy would have a big hit to the German economy. Growth would slow, but Germany has the strongest fiscal in the EU. It can offset the recessionary impacts of banning Russian energy by pump priming growth through the fiscal channel. I think this is time for Germany to stand up. Actually, it's energy sanctions are it's the key angle that the West can hurt Putin and maybe stop him with this invasion of Ukraine.
There has obviously been a lot of resistance to that here in Germany, which is one of the biggest EU importers of natural gas. Do you get a sense that resistance is shifting at this point?
Well, if you think about sanctions, there was a lot of resistance to SWIFT sanctions from Germany, amongst other countries, resistance to CBR sanctions. Remember, a lot of these companies, self-sanctioning has been the new thing, that companies have been embarrassed by the fact that they're still doing business with Russia and Putin, the war criminal, and the stuff that he's been doing in Ukraine. I think the embarrassment is a massive factor of working towards momentum in terms of sanctions. And I think in the end, the German government itself could be embarrassed into actually rolling over in terms of the energy sanctions option. One thing that's been talked about is an Iraq-style food for oil program that might be interesting and might be a middle ground, I guess, between a full ban on imports from Russia that could probably help some kind of transition process.
What exactly
in energy.
would that look like? An oil for food program?
Yeah, so sure. So any exports of oil or energy by Russia would be paid for, and the monies would go in an offshore escrow account that would be managed by the international community. And when Russia needed to use them, it could only use them for food or humanitarian reasons. It was imposed on Saddam Hussein, if you remember, after the first Gulf War, and was pretty damaging in terms of the Iraqi economy at that point in time.
Timothy Ash from Blue Bay Asset Management, thank you so much for joining us.
My pleasure.